So this is the correction phase of the market as it gets overbought. And as it corrected, you can see, just look at these crosses here, the pink crosses, that's the daily 20. Look at the rejection. Boom, 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 kind of try to get above it. Nope. Retest. Nope. That was tradable for us. Boom, boom. Nope. That was a Trump tariff announcement. Oh, boom. Nope. 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 Bounce. That's a bounce. That's a bounce that held. That's a rebound. See the difference? Bounce, 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 bounce. So if you remember, as an example, in this market right here, where we retested the 20 and failed, we put on a trade here, a short. We shorted the market as it failed its retest, as an example. The next day was pretty terrific. But then Monday, Tuesday, Wednesday, leading up to the tariff talk, was a bounce. This right here is a bounce. We were short the market here. We did not exit our positions. Why? Because you were holding the 20 period moving average. This was still making lower lows and lower highs. This bounce did not chase us out of our shorts. In fact, some doubled down and added to the trade. And then what happened? Boom, boom, boom. That's how you make money in this market. Now, you know, after we took profits here and you start to get oversold, what do you expect to happen? It's one word, starts with a B. Yes, you know you're going to get a bounce. The question is, does the bounce turn into a rebound? Does the rebound turn into a reversal of trend? So the reason why I use this particular terminology is so that you can get a feel for market direction and make decisions based on your narratives and so forth. So if the market is trending down, let's just say, and the narrative supports what's going on. Maybe there's some macroeconomic data, whatever it is, right? There could be a number of different layers of things going on. The dollar is selling off, bonds are selling off, right? Gold is shooting through the roof. All the things that are in our market weather, which I'm going to get to in a minute. We're trending down, we're trending down, we're trending down. Okay, so what do we want to do? We have a narrative, but we wait for confirmation on the charts themselves. Technical confirmation, taking out certain levels of support, waiting for maybe gold to reverse, waiting for the dollar to move one way or the other, all the things that we're going to be talking about in a few minutes. But you wait for that technical confirmation. What is the narrative? Well, the narrative is, looks like things are trending down. This is happening. This happened with earnings. This is happening with the jobs report, blah, blah, blah. It looks like if it takes out 5,600, it's going to go lower because that's a real support level. That's a narrative. What I refer to as a bullshit narrative. Why do I call it a bullshit narrative? Because it is. Because you're all full of shit, including me. We don't know. Do we really think that we can build a narrative and trade off of it? Are we that smart? Is Michael that smart? Well, why doesn't he just give us the narrative and we'll just freaking trade? Yeah, wouldn't that be great? So my point is, as humans, we can't help having some kind of narrative. Well, the market should do this. Well, it should do that, should do that. Well, if this happens, then that should happen. The narrative is perfectly healthy to have. I call it a BS narrative because all my narratives are BS until they confirm. Understand? So the idea is, what is the market doing? Well, it's trending down. Do we have confirmation that it's trending down? Oh, well, look at the charts. Okay, it is. And we look at our market weather to confirm what the heck it's doing. Okay, got it. Well, it's doing that. So here comes the narrative. You ready? So if it continues to do this, if Apple breaks 200, if Nvidia breaks 106, if Bitcoin turns around and does this, yes, do the if then statements. If it does this, then I'm going to do that. Great. Those are narratives. But we don't trade our narratives. What we do is we look for a technical confirmation of our narrative. That at least gives us a stronger, basis. Well, JC, some people do like trend lines. And trend lines can tell part of the story. But trend lines can also be very deceiving, and they can give you a bias. And how many times has price broken through a trade line only to reverse? Because the focus was on the trend line breaking, whether it be up or down. It's a small part of it. I'm not a big fan of trend lines because it does focus your eyes and your attention on one aspect of price action and doesn't allow you to get more of a global view. So I don't believe that trend lines tell the true story. Also, they're not exact. Sometimes you get a lower low or a lower high. As an example here, look at this. So this was making lower lows and lower highs, right? But then this made a sort of a higher low. So if you were looking at trend lines or something and you saw that this broke the trend line to the upside, if you were wherever you drew your trend line, wherever it was, on whatever time frame, this would have been a false breakout. It didn't really break out. This was a false breakout. Didn't really happen. So it kind of made higher highs, higher lows, but there were too many other factors to consider. I still don't think that is a way of looking at it, but to each his own. I'm just here to give you the benefit of my experience and a methodology that works, and then you can combine that with the stuff that you already know, and you see what turns out to be the best for you in your trading decisions. So the confirmation, the technical confirmation, is what allows you to take a trade in one way or the other. So now let's just say you take the trade. Let's continue. So you take a trade. It's going to be a short. Okay, great. What allocation do we use? A pilot position. And maybe you got more than one. Maybe you're shorting Apple. Maybe you're shorting the Russell. Maybe you have a short on Delta Airlines, whatever it is. You've picked out stocks based on the fact that it's trending down. You already did your market weather first. You didn't pick the stock first. Market weather first. Just like you would not make plans to go away this weekend without checking the weather. You're not going to just book flights to go to Myrtle Beach and hang out on the beach if you didn't check the weather. If the weather says thunder showers, violent storms throughout the entire weekend, are you booking a trip to Myrtle Beach this weekend? Boy, you guys are really slow on the trigger here. There you go. N-O. Very quickly, you can just type N-O. You could even use N if you like. No, you're not going to book that trip. So why would you pick stocks to put your money into if you didn't check the market weather first? So we're going to just put a little pilot position here. Okay, we check the weather. We see our trade that we want to take. We take a couple little pilot positions here, and now we're trading short. If it's just a pilot, you don't need a hedge. If it continues down further, you've got your targets, you've got an allocation, your cut loss level, like when to get out. If it goes above a certain level, I'm going to take it off. Or you have an allocation rule like minus 70%, which is part of our 70-40 plan, which if you're new, you'll get to that at some point soon. So you've got your rules here as to what you're doing, where you're going to maybe add to a trade, whatever it is, right? So if you have this trade on and it works, targets hit, great. But then you're going to but sort of anticipate at some point when it hits a level, it's going to bounce. it's going to get oversold and get some kind of bounce because algorithms exhaust themselves and then buying algorithms kick in. It's just so that hedge funds can get better positions than you and I. So you are going to get a bounce. Now, whether that bounce triggers a gamma squeeze by the market makers to the upside or reverse gamma to the downside, if it fails that bounce, that's something that we don't know until it happens. But we are going to get some kind of bounce. So that was the answer I was looking for, is that as the markets rolled over yesterday a little bit, I came on the microphone, I went through the market weather, and what did I tell you? Some indicators on the market weather report were neutral and some were bearish. I had more bears. In fact, I rarely had any bull indications. I had mostly bearish positions and some neutrals. And so what I told you was, most likely, this is indicating that the markets are going to turn. And they did. And they did more today, this morning. But the question that I said was, if you watched my live update from yesterday, the charts pointed to a move lower today. It could continue until what? Until an absolute bounce. And then the question is, where from here? Does the bounce get legs and turn into a rebound? Does it break above certain levels? Or does it fail on its attempt to break through these levels? If it fails, then it is just a bounce. And when it takes out that level where it bounced from, where are you now? Well, whatever rebound we were in is over. Now, in this scenario that I'm painting, we didn't get to rebound, right? We just came to trading down, then a bounce, then a fail. So it would just be a continuation down, and then you could add more trades to the downside. The only other thing I'll add here is, if you are going to add more trades to the downside on confirmation that it's failing and moving lower, this is probably the point where you would want to add a hedge, because you will probably have a little bit more than just a pilot position. You'll probably have a few more trades, and maybe you have added to the trade, so your exposure or your allocation is higher. And when it's higher, you want to make sure you have a hedge so that when it does another bounce, you cash in on the hedges from the bounce, and then you can think about easing out of your short and still be profitable. When it does this, and you get a bounce, which we've gotten, if it pulls back and holds a level and goes higher and confirms the narrative that the markets might be going into a bullish direction, then guess what? It ain't a bounce no longer. It's now a rebound. And now what do we look for? We look for specific trades of stocks that got so beat up on this move that those are the best ones to take. You don't just jump into, Palantir or some of these trendy stocks. You want to look at the stocks that got beat up, that are starting to turn around with some volume and some strength. And you can look at their charts and go, oh, wow, this thing came down. It broke through the 200. And on this bounce, it got right back above the 200 again. Narrative. The narrative there is what? Well, if it pulls back to the 200 and holds, I'm taking it. If it breaks through the 20 daily, I'm taking it. That's the narrative. So the setup is there, yes. The narrative, that's you. And then the confirmation, that's the trade I want to take.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comments section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.